Joining me today is the CEO of online broker TD Ameritrade, Fred Tomczyk. Thanks for joining me today. Curious to get your thoughts on trading volume. That's obviously something that many people in the markets are discussing, and how light volume has been for a couple of months now. What are you seeing at TD Ameritrade?
What we saw is in January, February, and the first half of March, trading volumes were pretty good. And you saw a market that had some volatility to it. You saw the VIX move out, you saw intraday moves, and you had generally an upward trajectory in the market. It was a pretty strong market. What happened in the middle of March through the middle of April was much more of I'd say investors were still bullish, but they were cautious, and volatility came in quite a bit. And so trading does come down a bit. I think since then what we've seen is a market that's been pretty much very low volatility, very little intraday movement, and as a consequence, lower volumes. There's a lot of uncertainty over the market, and we're just sort of sitting there, and I think people are waiting to see which way this market's going to go, and it's going to take an event or some news that is not expected right now to send it one way or the other.
Some people say that when the market's going up on low volume, that's something to be concerned with because it shows a lack of conviction.
Certainly if you're a trader, you have less things to trade off because they do try to trade off movements in the market. But I think generally right now what you're seeing is a general cautiousness on behalf of the investors. I did check our social media site called Ameritrade before I came over, and I think people are generally waiting to see where this market's going to go.
We obviously have this hostile attempt by NASDAQ and ICE to try and buy the New York Stock Exchange, which has already agreed to merge with the Deutsche Börse. Other exchanges are merging. Is that something that you'd expect to drive even more consolidation in your business?
The things that are driving consolidation in the exchange sector have a lot of similarities to what drives consolidation in our sector. And so you typically either do an acquisition for one of two reasons. One is you basically just want to take do the acquisition, take out some costs, and leverage your technology, because both industries are very heavy on technology, and so you have very high operating leverage through the use of technology, and you want to spread that out over a greater number of units. And I think that's an analogy to the NASDAQ offer.
Right.
I think if you look at the other one with the Deutsche Börse, the NYSE, that's much more like our Thinkorswim acquisition, where you're extending into a growth area for a capability.
Traders and investors, it used to be that stocks were the only game that people cared about, but now bonds, options, derivatives, currencies, commodities, there are so many other assets out there that the average trader really cares about. So how is TD Ameritrade, beyond the acquisition, looking to capitalize on that?
If you look at trade volume, we're the largest online broker in the United States and not the world. And we're very well positioned. About 30% of our trading volume now is in derivatives, options, futures, and foreign exchange. Largely options and futures. Part of that was the acquisition of Thinkorswim, which we saw that space, and Thinkorswim was number one in option trading. We were number two, so we are way ahead in the derivatives, particularly the option space, beyond any other of the major players. We're introducing a new trading platform that's going to be called Trade Architect, and it will bring down a lot of the things that you see in Thinkorswim, but simplify it.
What's TD Ameritrade doing to really try and capitalize on the fact that many investors, young investors particularly, are really enthralled by ETFs as opposed to mutual funds these days? Yeah,
well, I think the ETF in itself is a structure. And it's a product, and it has some advantages over a mutual fund, but it has a lot of similarities. I think what you're seeing today is a lot more exotic ETFs, whether it's commodities or whether it's the inverse or the
levered bets against silver, for example, have been big winners lately.
And so I think that we have all those products, and they're appropriate provided you understand what you're buying.